Hello, investors. Welcome to yet another edition of 18 Minutes with 180 Markets. Friends, as we're filming towards the end of 2021, we know that the markets have been very tricky right now. And because of that, we are paying extra special attention at 180 Markets on focusing on great risk-reward relationships in our investments. That is, we want to take the least amount of risk for the greatest amount of reward. And that, friends, is why we are so excited today to bring you Phil Hoskins, Managing Director of Marvel Gold, because Marvel has one of the cheapest valuations out there with a huge amount of upcoming catalysts. It has both gold and graphite with explosive potential upside, all at a very good price, as mentioned earlier. And with that introduction and to talk more about it, Phil Hoskins, welcome to 18 Minutes with 180 Markets.
Hi, Greg. How you going? Thanks for having me.
Great, Phil. Hey, Phil. People invest in people as much as the projects. Can you tell us a little bit about yourself?
Yeah, my personal background is as a chartered accountant. Started at a mid-tier accounting firm, moved to Ernst & Young, spent 10 years in the property development space in Australia and in London. And property development is actually quite similar to mining in terms of going through the feasibility study phase and then a construction phase. Then spent the last 11 years in the mining industry. So firstly as a CFO of an iron ore producer, and then the last 7-8 years in roles as a managing director. And principally that's been developing the graphite asset in Tanzania that we've recently spun off. And more recently in the last 18 months, overseeing the gold exploration in Mali.
Yeah, and as you said, there's so many parallels with project development between the property side, project side, or whatever it may be. It's about, don't you think it's a lot of times about setting up a timeline, not only hitting milestones, but also planning for contingencies as well?
Yeah, absolutely. I think the risks are slightly different between a property development and a mine finance. But that it really has set me up. I did a lot of debt financings in the property space and understand that it's just about allocating the risk where it needs to lie, and then really working through that on the graphite space and in the future in the gold space. It really excites me, and that's my skill set. Great.
And speaking towards Marvel now, can you just tell us a little bit about Mali in Africa and about what has, people may not be so familiar with it from a gold perspective. Can you just give us a little context about Mali and gold and what makes it so exciting?
Yeah, look, Mali's had some of the highest caliber gold discoveries in the world. You've had around 100 kilometers from us, you've got the Marilla gold mine that was owned by Barrick Gold. You've got Loulo-Gounkoto. You've got Fekola, which was owned by Papillon and sold to B2 Gold. So you see these really large tier 1 gold discoveries, and that's what everyone's in this game for. And certainly West Africa is probably the final frontier for maybe more cheaply and easily finding some of these really large gold systems. And that's what excites us. Our executive director of exploration, Chris Van Wyck's had a lot of expertise in West Africa, and he's very driven to have a multi-million ounce discovery of his own for Marvel.
Great. And when everyone hears about West Africa, Namibia, of course the first thought is political risk, geopolitical risk. Can you just tell us a little bit more about the geopolitical situation in Mali, number one, and number two, how we can't help but notice the pricing, how cheap Marvel seems, and it just seems like so much is in a price already.
Yeah, look, Mali's been a stable country from a mining point of view for over 30 years. You've had Resolute, and I mentioned Barrick, and B2 Gold, and a number of companies operating there for 20, 30 years without any changes in the mining law. And that's the most important thing, I think, with a lack of agriculture or tourism. They really are a mining dependent economy. And so certainly through COVID, and there was actually a military coup there around 18 months ago. Even through all those things, the mining industry was unimpacted. And in terms of, I think, in the year to April this year, Mali was sitting number 6 in terms of countries, in terms of, funding or financings for gold exploration. So whilst there can be a perceived political risk at times, in West Africa, the size of the prize and that sort of reward trade-off is absolutely there. And certainly we're down in the south of Mali. There's no security issues or anything down there. So yeah, look, we're very happy to be there. As you said, a lot of these things are factored into the price. We compare ourselves against other ASX listed companies in the region like Oklo Resources and Chessa Resources, and sit 10 to 15% of their valuations on an EV to resource ounce basis. So I think we're relatively new on the block. We're 18 months into our exploration there, already north of 1 million ounces and a lot of growth potential. So we certainly feel undervalued, but we think we're going to be able to do something about it.
Great. And can you just tell us, you alluded to it's at 1 million, you're at 1 million ounce resource already. Can you just tell us a little bit more about your specific project?
Yeah, sure. So it's a 3 kilometre strike length. The resource is from surface, 1 million or 1.025 million ounces at 1.2 grams per tonne. I mentioned it's from surface in one continuous thick lode in the southeast, and in the northwest it's a couple of separate lodes. So we think it's going to be low strip ratio, which is very important to mining costs. The metallurgy is excellent, so we'll have excellent recoveries through industry standard processing. So with that eye on the future, the 1 million ounces we've already got is imminently developable. You've got 70% of that resource within 150 metres of surface as well. So that's very exciting, and I guess from here it's also more about the regional picture and what we've been able to consolidate down in that area.
Yeah, and look, you've been, Phil, extremely active over the last, call it 18 months or so, putting together this land package. Can you just tell us a little bit about your strategy behind it?
Yeah, so we started with a 100 square kilometre license. Given the proximity to other operating mines, we believe we need to develop our own standalone mining operation here rather than trucking the material to the nearest mine. And so to give ourselves the best chance at doing that, we sought to consolidate a significant land holding surrounding that license. And it's not just consolidating land for the sake of it. There's a big controlling structure coming down through the south of Mali known as the Banifin Shear Zone. It's the same shear zone that the 7.5 million ounce Marilla deposit comes off. And so in the regional magnetics, we can see a set of disturbed structures or sort of second order splay coming off that shear zone. And that's where you want to be for making gold discoveries. So the fact that it was already 1 million ounces there, we have other known occurrences of gold mineralization. So we set about consolidating that in a series of deals, firstly with Oklo Resources, that company I mentioned earlier on the ASX. That was 200 square kilometres bolted onto the western side. And then progressively with Malian vendors just picking up various licenses. And we've now got over 800 square kilometres, which is the largest contiguous land holding in Mali.
Wow. So you really have a strategy behind it. And at 1 million ounces, may I ask, would you hope to see, call it over the next couple of years, that 1 million ounces grow? Yeah,
absolutely. I think even around the existing deposit, there's a lot of opportunities where you can see where it's open. We're not going to go back and sort of infill drill and chase those things up, because I think they'll be incremental from there. What really excites us is across that regional land holding over the last 18 months, we've done all the groundwork with multi-element soil geochemistry, with high resolution geophysics, to be able to delineate drill targets, very high quality drill targets to follow up on. So that growth is going to become from a lot of sort of near deposit exploration, looking to find the next Tabakoroli, another million, another 2 million ounces if we can.
Yeah, and I guess that leads us into, over the next, call it 12 months, Phil, what should investors look for?
Yeah, look, on the gold side, we've got 3 auger rigs and an air core rig turning around the clock. So there'll be a lot of news flow coming in the first 6 months of next year. We'll also dart back and do a little bit of drilling around the main deposit. So I guess with all those drill rigs turning, you're going to see a continuous news flow, and it's high impact news flow. We're quite confident of making a new discovery this year. And we think that will be an absolute catalyst for re-rating the company. On the graphite side, which we haven't spoken about, I'm expecting that there will be an in-specie distribution of our shares to our shareholders. So we own 50 million shares, or 31% of Evolution Energy Minerals Limited, code EV1, which we spun off in mid-November. The intention is to pass those shares up to our shareholders as well.
At this moment, though, for every share of Marvel, you do have a share of, or you have an interest in Evolution. Can you just tell us about the Graphite project a little bit for investors that may not be so familiar with it?
Yeah, sure. It's a project that I'm very familiar with. I was there from the very first drill hole in 2014 and through to getting it fully permitted, completion of a definitive feasibility study, and all of that. So it's one of the coarsest flake graphite projects in the world. For the uninitiated, coarse flake generally leads to a higher sale price. So this will be a very high margin project. And importantly, in spinning this off, we were able to attract a global ESG fund by the name of Arch Sustainable Resources Fund. And they've come in really wanting to drive Evolution to becoming a sustainable graphite supplier. And that's where that name Evolution came from, is that everyone understands the evolution on the demand side, graphite being used in lithium-ion batteries, but there's a real evolution happening on the supply side to go ex-China to have sustainable graphite with a low carbon footprint. And that's certainly the strategy that we're going down. It's construction ready. We're going to step through the next 6 months of an ESG framework that Arch have put together for us. And at the end of that, towards the back half of 2022, we're expecting we'll be in a position to be able to bring in some big green funds and make a construction decision.
Yeah. And Phil, I suppose, it's a great spot to talk about, this is part of your track record as far as being a development manager, that within Evolution, within your property development background, are some of those skills, again, very applicable for Marvel? The gold portion, that is.
Yeah, absolutely. I think Marvel's, probably a couple of years behind Evolution. I think at the moment, very much in the exploration phase and wanting to grow that resource into a multi-million ounce resource. But there's no doubt that that taking it from a resource through to a financing decision is, I guess, the sweet spot of my skill set, or certainly I believe that. Absolutely. Having gone through what's been required to get Arch in to have other financiers interested in Evolution is absolutely the process that Marvel will need to go through over the next couple of years.
Yeah. And Phil, are there any other additional upside components within Marvel that investors should know about?
Yeah, I guess we've only spoken about Tabakoroli, and I guess for good reason. It's our flagship asset and one we're incredibly excited about. But we do have other properties we brought in, for example, through that deal with Oklo Resources. It's a 200 square kilometre property called Yanfalila, which is 30 kilometres from an operating mine owned by Hummingbird Resources. And you've also got the Colindiava project, which is further along that Banff and Shear zone, closer to Marilla. Both are earlier stage. Colindiava looks really exciting. There's a 15-kilometre gold in soil anomaly running through there. So it's just another one of those things that projects that haven't had a lot of work done to them will apply systematic exploration to them, much lower cost exploration to them, and try to bring them along to the point where they're drill ready. And we've got some targets to drill. But right now, the focus is Tabakoroli. We'll do the earlier stage work on those projects, and they'll need to stack up in terms of the quality of targets before we stick a drill hole in them.
Yeah, and again, does that come back to managing Marvel as far as what is the priority, what is secondary, what is tertiary, and so forth and so on? Is that critical in your mind, where sometimes some companies, they almost get spoiled with choice and they just don't know where to focus?
Yeah, look, I definitely don't want to be a company that takes a scattergun approach to everything. I think you need to rank and prioritise with a limited pool of funds. You need to prioritise what is going to add the most value to our share price. And my view at the moment, with the million ounces base load already at Tabakoroli, then adding more ounces around there is going to add more value than, say, the first 10,000 ounces at a new project. Obviously, a new discovery on a completely new property. When you look at what adds value to things, new discoveries are that exploration phase or that discovery phase is where you can get a real kick. So at the same time, if we've got good targets coming out of the work that we're doing there, we owe it to ourselves to have a look at those or bring other people in to do that for us. But I think the good thing about all those projects, they're all within an hour of Boogooni as a sort of a base. And so we sort of really are focused on the south of Mali moving forward as a sort of geography, if you like.
Yeah, great. Hey, Phil, we have to keep these interviews short, unfortunately. Do you have any closing remarks for the audience at this point?
Yeah, look, I think it's like you said at the start. We through this spin-off process with Evolution, we're sitting on an investment worth $23 million. We've got 1 million ounces of gold. So you've got the two different commodities, but it doesn't matter which way you're looking at it. You're almost getting one of them for free. And certainly, I think it's one of those things. I don't know whether it's Christmas or what it is, but maybe the market has overlooked it. I think when we can announce this in-specie distribution, it will become a much more clear investment proposition to everyone. And certainly looking forward to both companies standing on their own 2 feet and adding value to all our shareholders through 2022.
Excellent. Phil, definitely stay in touch and we'll be sure to watch you.
Great. Thanks for your time, Greg.
Bye-bye. Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.